Ladies and gentlemen, welcome back to another training with MRC Financial. I am your training coach, Hector Guizar. Today's topic is the boomerang foreclosure that many agents in the real estate industry are talking about. And here's a supporting article that hit my desk recently titled, "A Double Whammy Coming When HELOCs and Loan Modifications Reset in 2015. Here's some important information that homeowners and agents should be aware of. An article written by Brian Collins says it looks like there is a collision course in the works that affects millions of homeowners with HELOCs and loan modifications that are going to reset in the year 2015. Interest rate resets on many home loan modifications and home equity lines of credit seem to be on a collision course that may create a hardship for many borrowers who didn't expect to be so vulnerable. HELOC originations peaked in 2005, and most of those second liens are due to reset in 2015. The peak year for first lien modifications was in 2010, and most of those proprietary and government-sponsored modifications are also due to reset in the year 2015. A simultaneous hike in the monthly payments of both first and second liens is sort of a double whammy, says Aaron Horvath, a SVP at Springboard Nonprofit Consumer Credit Management in Riverside, California. Homeowners will have to time their budget to afford the higher payments, which is where housing counseling can play an important role. But for some borrowers who have been barely able to make the reduced mortgage payment, the resets could be the straw that breaks the camel back. The Treasury Department launched its Home Affordable Modification Program in 2009, the Obama plan, and modification activity peaked in 2010, when servicers completed a little over 500,000 workouts for struggling homeowners. At the time, the prevailing mortgage rate was around 5%, but servicers reduced the borrowers' rates to 2% to make payments more affordable to the consumer. The terms of HAMP mods include rate resets after 5 years in 100 basis point annual increments. So meaning that by 2015, those HAMP mods from 2010 could experience the first of 3 annual 100 basis point resets to bring the interest rate up to 5%. With a 100 basis point step up in the rate, the median monthly payment increase is about $95 per month, with the majority of HAMP borrowers experiencing 2 or 3 rate increases according to the Treasury estimates. This step-up concept works well when borrowers are experiencing income growth, of course. But many borrowers have not experienced wage increases. Many are still unemployed, still looking for work, and some are still underwater on their current mortgages. Meanwhile, a HELOC rate reset could add another $100 to $300 to a borrower's monthly mortgage obligations, really putting that homeowner into a bind. The Hope Now Alliance of Mortgage Servicers completed over 1.2 million proprietary mods in 2010. Most of these proprietary modifications have HAMP-like features with a 5-year reset and a 100 basis point step up in annual rates, according to Hope Now Executive Director Eric Selp. As investors and lenders did more modifications, the features of later vintage modifications changed over time, he says. Also, a spokesperson for Wells Fargo, the industry's largest servicer, says the banks are currently reaching out to customers 5 months in advance prior to the effective date of the interest rate change. And then they're also sending a reminder, communication 2 and 1/2 months before the change becomes effective under the HAMP rules and guidelines. Under Consumer Financial Protection Bureau rules, servicers must notify borrowers of a reset 120 days in advance. So there is not going to be any surprises. The banks are definitely going to send out the notices. They're going to contact homeowners and let them know that this is what's happening in the next few months to come. These notices must include contact information for borrowers to contact housing counselors for advice and assistance if needed. There are going to be millions of people dealing with these resets over the next few years. The good news is that a lot of these servicers and banks have the infrastructure in place now. The housing counselors are staffed up, they are educated, and all that stuff is in place. It will not be quite the chaos that we dealt with in 2009. Here at MRC Financial, we have provided one-on-one counseling to over 100,000 homeowners across the country since 2008. For a location near you, you could always go to our website, www.mrcfinancial.com, or call the 800 number on the screen that's located on the bottom. For a free consultation or just to come in so we can review your current loan modification agreement, contact us immediately. Also in May, Hope Now Servicers completed over 11,000 new HAMP modifications and over 24,000 new proprietary modifications. So you can see that they're still help, and programs available for homeowners that are struggling. The Treasury Department recently extended the HAMP program through the year end of 2016. Many HAMP borrowers facing rate increases will qualify for alternative modifications, including a HAMP Tier 2 modification program. Now, a HAMP Tier 2 program is a program which offers a borrower a fixed rate based on their current mortgage rate and a new 40-year term. So obviously it's going to freeze the rate. If they're in a step-up program, it's going to freeze the rate right there and re-extend their current mortgage from a 25-year or 30-year all the way out to a 40-year term to make that mortgage payment more affordable to the homeowner again. The current mortgage rate on a HAMP Tier 2 modification is around 4.25%, fairly low interest rate. Treasury officials wanted to keep this option open for borrowers facing reset, which is one reason the department extended the HAMP program through 2016. As you can see, the future still holds some challenges for current and future homeowners. We need more licensed agents, more licensed loan officers, and counselors to help with this financial epidemic. Homeowners still have options to do another loan modifications if it's been at least 1 year, and a loan mod on the second lien, a 2MP. A refinanced or a HARP program, a home affordable refinance program, if the house is still undervalued. A short sale is always an option available to the homeowner, or possibly a Chapter 13, which can eliminate the second lien altogether if the client and the home does qualify. Programs are available. Contact an MRC or representative now to go over your options. Either go to our website, mrcfinancial.com, or call the 800 number on the screen. Our agents are standing by to help you out with these tough decisions and these tough documents that you have to read. Today, guys, that will conclude our today's training. Again, my name is Hector Guizar, and we look forward to helping you and your family succeed in this tough economic times.